Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video I want to talk about how to get started in property in 2023. Now 2022, in fact, the last 3 years has been an absolute roller coaster in property. We would have thought, and logically, when we went into the pandemic, we would have all expected that house prices would go down. Very briefly, they did in London. In fact, they went down a fair bit temporarily. Now, what actually happened was people didn't really financially get hit that hard because there was the furlough scheme. They weren't going on holiday, so they were saving a ton of money. In fact, you couldn't even buy stuff because stuff wasn't getting shipped abroad or into the country as easily as it could have been. So in 2020 and 2021, we had an absolute boom in property prices, which was absolutely crazy. And then everything started to go really, really wrong. In fact, this year, 2022, things started off very, very well. Interest rates were still very, very cheap. House prices this year on average have gone up around 10 to 13%, depending on region. But now things have started to slow down, and that's partly because of inflation. So inflation hopefully peaked out at 11%. I'm sure you're bored of hearing of inflation now. And then we've got the cost of living crisis brought on by the war in Ukraine, brought in by the inflation, and all of these things combined are meaning that everything is just really expensive for people. Gas, electric, food, everything that you normally buy has gone up significantly in price. That has led to interest rate rises. So in the last few months, in fact, 9 consecutive meetings with the Bank of England, they've raised interest rates. They've raised interest rates back to back to back to back to back. Now we've got a base rate of 3.5%. Now, for a lot of people that were on big mortgages, maybe they've got a 300 grand house and they've got a 90% mortgage on that that they took out 2 years ago, they're going to be in for a bit of a shock when their deal ends and they need to find a new deal. And that's what we've got to worry about, because people's mortgages, for some people, could go up by as much as £800. On top of the cost of living crisis, that is going to cause real problems. So, what else is going on? Well, you've got so many factors that are hitting us as investors. So interest rates going up for a property investor is kind of worse than for a residential person, because we pay interest only. So the movements in the payments is going to be massive for us. If your mortgage goes from 2% to 4%, your payments have doubled. And that is pushing a lot of landlords out the market. What more, though, is pushing out the landlords out the market is 2 other factors. One is the energy performance certificates, the EPCs. By 2025, they have to be at level C or above. And some properties, that's just not feasible. It's not likely that that will actually happen. The office that I rent, we're looking at the lease at the moment. I had a quick look at the EPC on this. That's a G. A G. It's a nice office, but the windows are sash. I mean, you have to crank the heating on in here, and the landlord needs to fix that because he's going to have to get it up. But the energy performance of a residential property by 2025, if it's not at a C at the moment, they're saying you won't be able to rent it. That is going to cause an exodus of landlords that just either can't afford to renovate their property to that standard or just aren't interested. Now, in the last couple of years, we've already lost 30% of landlords, and that's a real disaster. Now, what else is going on? Well, the biggest thing that's hitting landlords at the moment is something called Section 24. You see, for years, we've always bought in our personal name, and I have a number of properties in my personal name. Now, you could always write off the mortgage payments, and that would come off your tax bill. That's how normal businesses work, right? So if you have a normal business that turns over £100,000, you're not making £100,000 profit, are you? You've got to take out your staff. You've got to take out your rent. You've got to take out your energy costs, your stock costs. And at the end, you will be left with your profit, and that's what you pay tax on. And so maybe if you do 100 grand, maybe you make £25,000 profit at the end of that year off of that 100 grand, right? Now, as a landlord, they've changed it that you now pay on the gross amount of rent. So say you're a landlord and you got 100 grand in rent, you're paying tax on 100 grand. That is insane. And that's how Section 24 works. And so maybe you're a landlord right now, you get £1,000 rent from somebody. Now you've got to pay 500 quid tax if you're a higher rate interest, a higher rate taxpayer, which more landlords than likely would be. Then your mortgage is 500 quid. You're breaking even at best. Now, if the boiler breaks, you're losing money. And so tons of landlords are looking to leave because of that. So what's the right way? What do you need to do to get investing in 2023? Well, there's a few things. First thing you need to do is set it up in a company. Now, why would you do that? The difference between personal and company, so now my properties for my daughter Georgia, which we've got 2 this year, are in a limited company. Now we can write off expenses, right? So we can have mobile phone if we need that for the business. If we've got a laptop we needed to buy to run that business, we can take those expenses and knock them off our turnover, reducing our profit, right? And so that's the only really way you can invest if you're going to own the properties in 2023. They must be done through a company. Now, at the time of recording this, the tax that you pay on the profit only is around 20%, right? Is around 20%, which is way, way better. You can also put yourself as a PAYE person through that limited company, so you can take a free tax amount through that. So it's around 12 grand. You can take out that business without being taxed if you run it through a PAYE scheme as well. So that's what you need to first do, is run the properties through a limited company. Then if you have 100 grand in rent, but your profit after your mortgages and everything like that is only 25, you're only going to pay tax on 25, not the 100. That's a huge difference, a huge, huge difference, and it's the only way to do it. Now, the most important thing is that to get started is you get educated, right? It's more important than ever before that you really understand how to invest in property, because it's going to be a tougher year. Prices are going to drop. That brings opportunity, but you need to know how to find those opportunities, and you need to know how to learn to invest in those really, really good structured deals. So education is going to be very, very important in 2023. Always is important for whatever you do, business, property, anything is very important to be well educated on that. So what else? Well, there are going to be tons of opportunities. So you need to be brave and fearless. A lot of people are going to say that they're not going to invest in 2023. They're going to wait and see, wait for the properties to crash. But there are always good deals, whether the market is at a high, a low, or on the way up, or on the way down. There are always good deals in that market. And it's kind of irrelevant. If you get a deal that you can cash flow, so you can say, right, I can fix this deal on a 5-year mortgage, and this is the rent I'm going to achieve, I'm going to make this much profit, then why do you need to wait until the market goes down further? Because if the market goes down further, yes, the house might be cheaper, but the mortgage payments could be more because maybe the interest rates have kept rising. So it doesn't really matter. If you can get a deal to work today, then when the interest rates do come down and the prices go back up, you'll benefit from that as well. But the cash flow is the most important thing. Now, the other thing in 2023 that you need to look for is properties where you can add value. This is a real secret that is massively important to property investing. If you can't add value to a property, you don't really want to take it. So what does that mean? Well, it means that new builds aren't a good investment. I never buy new builds because they're always overpriced. They're just not for me. Now, if you can find an ugly house that you can make beautiful, that's the kind of deal that you want. You can find those in auctions. You can find those at north. If you look in the northeast of England, there are tons of properties that need refurbishment. And if you can do that, you can add value to that property and you can do very, very well. And that's the sort of thing you need to look for. So what we look for is houses that need renovation. So last property I bought with my daughter Georgia, that we bought for 60 grand. We spent 12 grand doing it up. We had a new kitchen, new bathroom, new carpets, plastering, decorating, made it nice. And then about 8 weeks, a bit longer than that, 12 weeks later, it was worth £100,000. So we were in the deal for about 75 grand, but in a short period of time, in less than 3 months, we made that property worth 100 grand because we made it nice. I've done that with other places this year where I've taken a studio flat and I've turned it into a 1-bedroom. I've taken a 1-bedroom, I've turned it into a 2-bedroom property. It's really, really important that you do that and you guys add value to property. So that's another important thing for investing this year. Next is cash flow, right? So in 2023, I think it's going to be hard to do a vanilla buy-to-let. And a vanilla buy-to-let is like I said, where you buy a property that's nice already. You can buy a property where you can add value, because then you've created some more equity and you can just rent it out as a buy-to-let. That's fine. But if you buy it at the price, the higher price, because it's already had the work done, your margins are going to be so small, it's going to be really, really hard. So high cash flow strategies are things where you can add value, so you can make the property worth more, but then the mortgage payments are going to be at the lower value that you bought it for, right? That's why that works. You can buy a house and turn it into a house of multiple occupancy. That is where you rent out each room separately. Obviously, you've got to be licensed for that. We've got tons of videos on this channel about that. You can also do something called serviced accommodation. And that is where you rent a property and then you rent it out on Airbnb, Vrbo, Booking.com, and all these other platforms as well. That is going to give you high cash flow strategies. So this is the secrets for 2023. I'm going to be investing. You should too. More people in the down market, 2008, 2009, 2010, became millionaires in property than at any other time recently. And so that's when you need to get into the market. So recap, you need to buy for a company. That's important. You need to get educated so you know exactly how this all works. You need to add value to the property. That's really important. And it must cash flow positive. It needs to be a high cash flow strategy to be good. Now, we're going to be running some live training in the new year, and I want you to join us. So in the description of the video is going to be a link. Click on the link, fill in your details, get all of that information, and come and see us live. Get educated on this property stuff. This is the opportunity of a lifetime. You've been waiting for markets to come down. They are. So jump on board while you still can. That's it from me. Check out all the other content, like this video, subscribe to the channel, hit the bell notification, comment below, check out all the other content on the channel, including this video right here.